GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to the weekly webinar. So some big moves in the dollar last week, saw a real collapse in the British pound notably, but a little bit of a bounce back in the pound at the end of the week, a little bit of a turn down in the dollar. The big event this week is Jackson Hole, where we might hear some news about tapering. For more information on that, check out our week ahead video. Big news from over the weekend is that Bitcoin is back over 50,000. So we'll have a look at our BTC USD CFD on Bitcoin, and also got another bounce back in the S&P 500 off the 50-day moving average once again. So yeah, we'll discuss all that and more. Any questions, drop the comment in the video, please, and please click that like button if you're getting some benefit out of these videos. All right, let's have a look at the euro-dollar pair. We're on a daily chart here, and this down-sleeping channel that I'll look in more deeply on the 4-hour chart, just about holding together, and you can see that we've got this longer-term area of support down here at 116 and 117, which was basically this low here. So 117 and the support is sort of working. We had a breakdown for one day, a pause, and now at the start of the new week we're pushing back above it. So potentially a false breakdown through the bottom of the channel and through the bottom of that support, which could be bullish and push the price up towards the top of the channel again. But you know, we're really in a kind of range trading situation longer term. But if we jump down to this 4-hour chart, we can see that we really are still in a downtrending environment. The downtrend wasn't really able to accelerate to the downside. You can see here we broke lower, chopped around this channel, which market did seem to be watching, and then we had that bullish move above, and we're pushing higher again. So maybe another challenge of the 20-day moving average coming up. But you know, we're still certainly in kind of downtrending territory. I think the big one would be if we could test the top of the channel again. That was the same thing we were looking at last week. But if we shorter term opportunities, this is where this recent slide began, and it's also around the 20-day moving average. We had the pause and big slide, so we can get back. Maybe those sellers from here, they refresh their shorts in this kind of area. That would come ahead of the 118, obviously, which worked well. So you can see we are kind of bouncing between 117 and 118. We couldn't get a material break below 117, so maybe the market will try a push above 118 and to the top of the channel that we've been looking for before. Here's the British pound. So this one's really interesting because, yeah, we're in a long-term, sideways move now, and so it was when we'd broken below these two lows, we thought that was a bearish sign, but we quickly got that bullish engulfing and a kind of false breakout, and we pushed right back up to resistance, failed there, and now we're right back at support again. So again, classic summer range trading, good short-term moves, but no particular direction. Given that we're back below this broken support, now we're challenging this same support again, just about at 136. Technically speaking, now that we've got two decent lows at the 136 area, if we get another break below, then that pretty much is a double top. And you can see the price action has been pretty nice. I mean, we've been riding up the 100-day moving average and put in two tops, drop below the 100. This is actually 120 because we use it for we use it to represent the 20-day moving average on the 4-hour chart, right? But if we use 100 DMA, we can see it works pretty nicely. Market was uptrending, dropped through the moving average, come out, tested the moving average, and rolled again. So that would be consistent with a break lower, right? The market action so far. We've uptrended, we've gone sideways, but we've broken the moving average, we've tested it, and now potentially rolling over again. But let's not try and kind of pre-guess what happens here. Let's wait for the break of support to confirm that we want to get really bearish here. As I say, it's summer trading, so it's quite likely that we just get a bounce back, between 136 and maybe even up to 139 again. So one thing I did want to note is, I don't know if you remember that in last week's webinar, we were looking at this downsloping trend line, and we had this downsloping price trend line here. And so the idea that that I discussed last week was basically, oh look, we've broken this declining trend line, we have got a retest, and it was about here that we were discussing it last week, and I was saying, well, maybe this is maybe this RSI is giving us a pre-warning about the trend line break. So we were looking basically for this downtrend line to break for us then to trade to the top side back up to resistance again. But that didn't happen. We didn't get the break, right? So even though I was sort of looking for it, and I thought that RSI was maybe a signal that was going to happen, I was still waiting for the break. So no trade technically would be placed here to the upside without that confirmation of the actual price. So we're looking at RSI, and it can be a useful, what's the word? Leading indicator of what's going to happen in price, but nothing's perfect. And so this time it gave us a signal that there could be an upside break, but there wasn't one. So then I just want to kind of point this out to say that no trade need have been taken to the upside because we didn't get the breakout. And once we've got to kind of break through this support, that was obviously the sign that the breakout hadn't happened. We've broken support, and this was when we start turning bearish, right? So either you're going on the break through the lows, or you're a bit more patient and you wait. And we didn't quite tag the previous low here. We missed it by a few pips. So it's one of those where if you were perfectly waiting for a signal in that at that former support, we didn't quite get to the support. So it was a near miss. Kind of like within literally a few pips, you could probably see better on maybe a 30-minute chart. Yeah. So we didn't quite get to it. Actually, if you'd looked on this little short-term time frame, you'd have seen probably those little lows there. Basically, we're just looking at this little consolidation period before the price really broke down strongly. So what was happening in here was the selling was taking place, and then the price finally gave up, right? But then once the selling abated, the price kind of trundled higher again, and then once we got back to the same price where the selling was taking place, it sold off again, right? So the point being that we were looking for an upside break. It didn't materialize. We got a downside break, and that was it. That was certainly tradable. So you don't have to cling on to your view like that. Just follow what the price is doing. So anyway, all that aside, we're now back testing this demand zone down here, which we had signaled, and we've had a bit of a bounce out of it. This is not a particularly, look at this moving average, it's basically flat, right? We've sloped lower with the most recent price action, but it was sloping up when there was a slight uptrend. So we're sideways for now. So we're not determinedly selling until we get this real big break below 136. But in the meantime, if you're aggressive, you could sell before this last little leg lower. I'd probably be waiting for a retest of this support, or potentially this again the same supply area that caused that little spike lower. Probably a move up to here would obviously have the best risk reward, and there will be some buying off the long-term support potentially, or just just the former low. And again, the most aggressive option would be selling at 137. But I think offer a decent demand area, that might be a bit aggressive. So we're sort of assuming that this downtrend does continue, and we're looking for the break, but we're not being overly aggressive about it, since this is a long-term support area. Right, moving swiftly on to dollar yen. This is the daily chart. Basically, I think this is probably the best way of describing the situation. Is we have a horizontal range where we had one false break lower and one false break higher, and then we've pretty much traded in the range since. Our demand area that we had signaled from last week worked out pretty well. I've just stretched that across from the previous week, but that was where we had that big bullish engulfing candle. We went right up to the top of the range, and we came back to where that where the price really kind of took off. You can see that's, you know, that was the break, right? Here is where the price really started taking off, and that's where we've come back to, and we've got a decent bounce from there. And the price is now basically put in that bearish engulfing around the 110 mark, and now we're back testing 110, and where that that sell-off really kicked off when it broke through that previous candle in this kind of 2-candle bearish engulfing pattern. So potentially, if we get a drop, trend or higher, potentially drop again. The only reason I don't really like this setup is that it's in the middle of the trading range. So zooming out again, you can see that, yeah, we've just been going sideways, where 110.70 odd is the top of the range, and 109.20-ish is the bottom of the range. So to be doing anything at 110 is like right in the middle of the range, and that's probably the main drawback to selling into this area. But you know, that was a decent bearish engulfing candlestick, so you know, potential opportunity there. Moving on from Forex into the metals market. So this is gold. This is the bigger picture. You know, we basically had that flash crash, right, which we talked about last week. We rebounded all the way back up to resistance, and we literally have done nothing underneath that that pivot area here, which is sort of a theme, right? Did nothing under the resistance, broke above it, did nothing above it, and then smashed below it, and then came back and started doing the same thing again. So really, a very much a sideways market here in gold. For the time being, it looks like this flash crash maybe tested the bears, and they didn't really succeed, right? You know, tried a massive sell-off, didn't really work, and demand has come in and pushed the price right back up to 1800 again. So sort of encouraging, but you know, we haven't managed to break higher again. Maybe a little dip down to 1750 could encourage some more buyers to come in. Maybe even right down to you know, to this kind of you know, just from this low here. First area of support, next area of support, and obviously that low below 1650, the kind of ultimate support that we're dealing with at the moment. But I suppose probably over the course of the next week, if we are going to break out of this sideways move, which probably we are, remember we've got Jackson Hole, so presumably something, you know, either something doesn't happen, which is disappointing, or something does happen, which encourages some price action. So that could be the catalyst. That's on Thursday and Friday. That could be the catalyst for us to get that breakout to the top side in gold. Moving on to silver, similar picture, right? This is our daily chart, and you can see that the flash crash, as we mentioned last week, pretty much tested the bottom of the range, and then the downsloping channel that we drew in actually kind of called the top quite neatly, and we just sold off down towards the same kind of support we were talking about in gold. You know, silver's been trading a bit more weak, so that 23 level is pretty much where we had the spike, and then we dipped down. Same as we were looking at gold, as in it's sort of like this area equivalent. We had the spike and then the consolidation. Gold was obviously a lot stronger and stayed strong, whereas silver kind of didn't bounce as much and is back down at this kind of equivalent support. So you can see generally the sign of a more cautious market where gold is outperforming silver, but they're both more or less moving in the same direction. Moving on to oil, this is our daily chart, and you know, pretty, again, strong uptrend. We dropped down to the 100-day moving average, bounced, couldn't make new highs, and now dropped through it. So to me, pretty bearish setup, right? And we're back down on the daily basis. We're back down oversold, really for the first time since this rally began. So it's all looking pretty soft for gold, right? But we've touched this major support, and we've got a decent little bounce off it. This candle is not complete, but if it does complete something like it's doing right now, that would be a bullish engulfing candlestick off support. That's pretty classic classic bull signal. Obviously, the only trouble is that we're below the moving average, and it looks like the price is rolling over. But you know, maybe this is just a correction, and the bull market's about to continue, moving average or not. You know, but at the moment we're making lower lows, lower highs. I'm not inclined to want to buy this, but I can certainly see why that would be a good and attractive signal to some. You know, there's the support, there's the signal. You know, it's coming off an oversold area. You know, there's got a lot going for it in terms of potential buying signal if this daily candle closes as it does. Here's on the 4-hourly basis, something again on a 4-hour chart to slightly back up this situation. We've got a bit of a kind of RSI bullish divergence here. New low was made. And then we made a higher low on the RSI, and you can sort of see that this trend seems to be sort of potentially reversing potentially. So a few things, you know, this bit of strength we're seeing early in the week potentially telling us that this moment of weakness has ended, but you know, you know, we crossed just about through this area. That's the first sign of strength. I'll probably first be looking for opportunities to sell on this first bounce off the lows. But if that sell, you know, say the price even got to, you know, maybe we get back to this low, and then it starts to roll over here, or we get up to this supply area, and it rolls over from there. I suspect it probably doesn't get back to the lows again, you know, and then if we get a kind of signal back here again, so if we get a kind of bounce, drop, make a higher low, and then start showing strength again, you know, that would probably be the buying opportunity with more confirmation than just what we're seeing so far. So let's see. Yep, bearish trend, but potentially reversal off the 62 level. Let's see. S&P 500. I've adjusted this daily chart to show us the 50-day moving average, and you can see it's just this 50-day moving average which has been working so well. And I mentioned it. I think the team mentioned it in the week ahead video. I think I've mentioned it in previous webinars. So yeah, that worked like an absolute treat last week. We're still rebounding off it now. Couple of down days, about 2% down, bounced off the 50-day moving average, pretty much retested the highs. Probably going to end up as fresh record highs again for the S&P 500 this week. But yeah, let's see what's good old Jackson Hole. Maybe we get a surprise out of the Fed and the market double tops, and we actually fail at the highs and roll over through the lows in some kind of dramatic way. That seems possible, and that would be interesting because we just had the test of the 50-day. So if we go down through it, you know, that would be the most material example since here or since here. Even though here you can sort of see the same thing. Tested 50-day moving average, came up to the high, didn't make it, dropped through it, and you thought, oh, okay, this could be danger. But actually, no, that was just a buying opportunity too before this near the previous low. So we could get something like that where we drop through it, and then price just comes back to this low, and we get the dip buying that sends us back through the 50-day again anyway. Eventually, there's got to be a bigger one. And maybe this will be the one, but you know, how do you really know in advance? It's very difficult to do. I think the best thing to do is to be tracking it on these shorter time frames and just go with the trend. Last but not least, as I mentioned, Bitcoin back over the 50,000 mark. So you can see here that we based out at the 30,000, consolidated. Sellers tried to sell the price down right at the top of the range, failed, got the breakout, and then again we tested these lows from the neckline of the head and shoulders pattern. Sellers tried to come in, but buyers overpowered it, were broken out again. And this shaded area that I'm showing here is, you can just see when we had that first real big drop, and we had kind of the day of like respite. On the 4-hour chart, you can see it a bit better. Let's go back to this left price drop, and you can see that's where the price really kind of dropped off. So that was where we had just before that big gap lower. around the 50,000 mark. So that's just what we're testing at the moment. Obviously, we got the big sell-off, the price jumped back to 50k, and people sold in at 50k and sent it all that way down. Potentially, we've just had one of these at 47,000, so it'd sort of be surprising if 50,000 caused the same. At the moment, it's looking bullish, and I think probably the best opportunities are the drop down towards the 47k mark, and maybe that tests the old high, test the former resistance as a support, and we assume the uptrend continues. If it breaks below that, that would be a bit more worrying. And obviously, it breaks through these lows, that I think the uptrend is off, and we're heading down towards the lows again. Okay, that's it. Calling it a day there. Thank you very much for tuning in. Make sure to subscribe to the channel and click that bell button so you get notified when these videos come out each week. Thank you, everyone. Good luck trading.